Hello, Mark Sturdy here again with the highlights of 7 days ahead's analysis this week of the last week, I suppose, looking forward to the next week. And you'll see that little has changed. We remain bears of the dollar against the euro, and we are bulls of the Nikkei. It's been a quiet week, no question about it. Let's look at the dollar euro. You'll see that the big picture is as it has been for some while, that we are bears of the dollar against the euro. And that's supported by this price action throughout the whole of 2026, whereby the dollar weakened and has gone sideways, and then has broken up out of the trading range just about 3 weeks ago. And it's just about retained the breakout from this trading range here, the most critical part of which has been the support at 114.80 to 115.80 or so, twice or three times it's bounced off that level. We are excited by it. We note that the slight pause in the breakout, but that it's managed to stay above 118.29 is exciting. Less clear in the very short term. It's a market that's finding, it seems to me, short term good support of 118.07, and we looked for it, having bounced off there, to go higher. Our other exciting situation was the Nikkei. Let's just deal with that. The Nikkei 225. Here is a market. Well, first of all, the S&P 500 has gone sideways. The long-standing bull trend remains in place, but in the weekly chart we see since the middle of October, the market's gone sideways, has been unable to break through 7,000, or more specifically in this futures charts, 70.14. This is the March futures. Time and again it's tried to break up and it's failed again and again, which is a cause of some anxiety for bulls, and they should be waiting for a clear break above 70.14 before they get involved. The Euro Stoxx 50 has been, like the other markets, slightly more bullish. The sideways price action has been since, you could argue it's been going up and has ratcheted higher since the mid-October, since the time of the S&P going sideways. This has been working higher and has found support, as bull markets will, on prior highs, 58.47. That has acted as good support. So it's in good fine fettle, but if you look more closely, the price action, the trading range, suggests wait for a break above 60.72 before you get involved. The FTSE, still more bullish than the others. This is the consistency since the mid-October, when, as I've described, the S&P has gone sideways. The FTSE, like the Euro Stoxx, has got above the prior high and is pushing up higher in a sedate, low-key bullish way, lacking thrilling, clear outbreaks, though. The Nikkei is rather more exciting because of the break of 39,600, the break up through there some 2 quarters ago. If you look at the weekly chart, and the well-constructed triangle was the catalyst for breaking through. The push-up above 52,500 has been the latest, some 3 or 4 weeks ago, is important. Looking more closely, this is the March weekly chart. The break up through 52,740 was the critical one. We have broken up into new territory. There was a pause last week. We remain bullish. So of all the bull markets, we prefer the Nikkei 225, no question. Bonds have been dull. Trading range, confusion. German Bund, failure to get up through 3, break up through these prior highs, confusion. Gilt, similarly, sideways since the beginning of 2025, a possible top failed, trading range. So stand clear of bonds. Oil, there is a short-term bull trend which we think is well constructed, but is altogether in a large area of sideways price action. We suggest stand aside. Gold, as I've described before, a bull market. It came off and bounced off the first clear prior high of any substance, 43.98, and has bounced well. Stay in there if you're a very long-term bull. Not a level to get in at. I suggest at this level, maybe if it came down again, it might be a buy down at this series of prior high supports from 42.99 to 45.99. This whole area of support should it be revisited, That would be good support level and possible buying opportunity. Thanks very much.